Hello, I'm Frank Nutter, and welcome to Reinsurance Today. I'm pleased to have joining me John Bender, who is the Chief Executive Officer for Global Reinsurance for Allied World. John, thanks for being with me.
Frank, it's nice to be here.
One of the areas that is particularly interesting for the reinsurance sector is growth. The hot topic in the industry is cyber risk. Do you see cyber risk as an opportunity for growth for Allied World?
I do. I think we're very interested in the space, and we have some of those types of exposures on our portfolio. I think the big issue in the cyberspace is actually selling the need for it on the insured level to the smaller middle market customers. The targets in the world see that. If you look at the world today, e-commerce has become bigger and bigger, and reputational risk on cyber and breaking into customer lists against competition are all major items. But I'm not sure it's recognized with the smaller, vendors, salespeople, companies, and I think the insurance industry and the reinsurance industry's help needs to create that awareness that it's a needed product out there, and that these businesses need the coverage to conduct their business.
John, thanks for that insight. Let me ask you as well about green technology. Certainly, we're seeing more of that in our society. Is that a growth opportunity for reinsurers?
I think it is, but I think it's a longer opportunity for us out in the tail. And the reason for that, I think, is, I think green technology is important, and alternative energy is very important for the future of our country and the world, quite frankly. I think that it hasn't seen the demand that would be expected of it. And a lot of the green companies haven't grown sales-wise or turnover-wise that we would have expected at this point in the development of green technology. So I do think it's an opportunity. I think that we have to keep our finger on the pulse of that industry, but I don't think it's generated the business as much as we would like to have seen at this point in time in the market.
John, government plays a role in various insurance markets. How does Allied World see the opportunity by downsizing government programs and creating opportunities for insurers and reinsurers?
We think the private sector always does things better than the government, and I think there's opportunities. The flood program would be a great example of that. The issue with the flood program right now is, number one, getting the government to agree to hand it over to the private sector, and number two, getting actuarial sound pricing on the exposure of flood, which got a little delayed after Hurricane Irene and Sandy. The Congress came back and pushed off a little bit the deadline for actuarial sound pricing on flood risk in the U.S. But I think it's a great opportunity for the industry, and I think we need to keep pushing those buttons in Washington to get that opportunity to look at that business.
John, the headlines in our industry routinely talk about the introduction of alternative capital in the industry. Do you see that as something that is stymieing growth for the traditional market, is enhancing growth? How does Allied World see alternative capital?
I think we see it as both a challenge and an opportunity. Alternative capital has been in our industry for a very long time now. It's not something new. The amount of alternative capital over the last few years has grown exponentially, and that's, I think, the threat. I think companies that decide that they're going to do things the way they've been doing them for the last 5 years and ignore the alternative capital in the marketplace will find themselves irrelevant in the next 5 years. I think the opportunity is to, if you can't beat them, join them and find ways to use our relationship and access to distribution to the alternative capital that comes in the marketplace and make it a win-win situation. And we've done some of that with our minority acquisition of Elis Re 4 years ago. So I think we're a little ahead of the curve on that. And I think that you have to look at this as both an opportunity and a challenge. And with adversity comes opportunity, and that's how we view it.
John, you're the newly appointed CEO of Global Reinsurance outside the United States and the European Union. Does Allied World see growth opportunities geographically?
But we do. I actually just got back from China a week ago. And if you look at China alone, the GDP there is about 6.5%. It's down from where it was last year, but it's significantly higher than what it is in the U.S. And if you look at the insurance space in general, the take-up rate on both commercial and residential insurance is significantly small. So even if they increase their take-up rate on those buying insurance on both the residential and the commercial, the premium generated for the industry would be in the trillions of dollars. And that's an opportunity. And that's just China. The rest of Asia also presents lots of opportunities. So yes, I think there's opportunities there that are there. There's regulation that needs to get through. China is trying to catch up with their CROS right now, which is going to present both challenges and opportunities for existing reinsurers in the space and new reinsurers coming in. But I think that to ignore Asia and especially ignore China would be at your own peril.
John, thank you. The Uh, the question would be whether or not the company is emphasizing certain lines of coverage over others. Property reinsurance has been under a lot of stress for the last couple of years, casualty somewhat because of the casualty market. Does the company see some emphasis or de-emphasis of certain lines of coverage?
We view our history as a company as being more of a casualty company than a property company, but we do like property cat, and we have a significant portfolio of property cat. You're absolutely right. The market's been under significant pressure, and we view everything on the economics of the deal. We love having long-term partners, but we have to have a fair to middling chance of making our returns year in and year out. So our portfolio shifts depending on where we think we can make the best returns for our investors. If the casualty market is where we think we can make the most, that's what we'll do. We'll write more casualty. If the property market is, we'll do that. But you have to be careful because we don't have too much of a volatility problem in our portfolio by writing just property cat. So we look for a lot of non-property cat. The more non-property cat casualty business we can write, long tail business we can write, it allows us to take more property cat exposure on the portfolio. So I would say, and that goes geographically too. It's much like the capital of the world. It looks for the best returns, while the capital in allied world looks for the best returns, both capital and resources. And that's how we run our business. So every year we take a look everywhere around the world in all the lines of business and try and figure out where we can get the best returns and then kind of put our resources and capital to those areas.
John, one last question. Are there events external to our industry that might have a significant impact on the market or growth opportunities for our markets?
Well, certainly a turnaround in the U.S. economy would be helpful. I think what's hurt the industry most of all is the artificial government pressure on interest rates around the world. And as we've deflated those interest rates and held them down, it's prevented growth. And I think when you lift that pedal up and let interest rates naturally rise, that'll be an opportunity for us. I think some of that, when interest rates rise several points, that's just not a couple of basis points, but when they run several points up, what'll happen is some of that alternative capital will leave our market. It's never going to leave for good, and it's never going to leave in total. But some of that will go elsewhere and find their returns in a more traditional manner, which will present opportunities too. I also think mergers and acquisitions and significant cat events around the world will have some impact. Now, we've kind of gone 3-4 years now without any major cats, and that's had an impact on the industry.
John Bender of Allied World, thank you very much for being with me today.
Thanks for having me, Frank.
And thanks to our viewers for joining Reinsurance Today.